Bitcoin crashes to $63,000. But whales just absorbed 1.2 million BTC. While everyone's panicking about Bitcoin dropping to $63,000, something absolutely wild is happening behind the scenes that Wall Street doesn't want you noticing. 1.2 million Bitcoin just got absorbed. That's over $75 billion worth of BTC quietly moving into strong hands while retail investors are selling in fear. This isn't random, and it connects to something way bigger happening in global banking right now. Here's what's really going on. Bitcoin hit $63,000 and social media exploded with crash predictions. Everyone's screaming sell, calling for $50,000, maybe even $40,000. Classic fear cycle. But here's the pattern nobody's talking about. Every single time Bitcoin dips like this, whales and institutions start accumulating massive amounts. 1.2 million BTC doesn't just disappear. It moves from weak hands to strong hands. Think about that number. 1.2 million Bitcoin is almost 6% of the entire supply that will ever exist. Gone, absorbed, locked away. And this is happening at the exact same time global banks are rolling out ISO 20022. Let me break down what ISO 20022 actually is, because this changes everything for regular people like us. ISO 20022 is basically a new universal language for money. Right now, banks around the world use dozens of different systems that don't talk to each other well. Sending money internationally is slow, expensive, and complicated. ISO 20022 fixes that. It's a standardized messaging system that lets banks, payment processors, and financial institutions communicate seamlessly. Faster payments, lower fees, more transparency. Over 70 countries are adopting it. The Federal Reserve switched to it. SWIFT, the system that handles trillions in international transfers, is using it. This is the biggest upgrade to global banking infrastructure in 50 years. Now here's where crypto comes in. Certain cryptocurrencies were specifically designed to work with ISO 20022. They're built to plug directly into this new banking system. And one of the most talked about is Quant, ticker symbol QNT. Quant created something called Overledger. Think of it as a universal translator for blockchains and traditional banking systems. It lets banks connect their ISO 20022 systems to multiple blockchains without rebuilding everything from scratch. Why does this matter to you? Because when banks and governments adopt this technology, they need bridges between old finance and new finance. ISO 20022 tokens like QNT are positioned to be those bridges. This isn't some random altcoin promising 1,000x returns. This is infrastructure. Boring, but potentially massive. Other ISO 20022 compliant tokens include XRP and XLM. These aren't trying to replace Bitcoin. They're designed to work alongside traditional banking, making the system faster and cheaper. For everyday people, this means your bank transfers could happen in seconds instead of days. International payments could cost pennies instead of $30 to $50. And you might not even realize crypto is handling it behind the scenes. That's the real revolution here. Now back to Bitcoin and that 1.2 million BTC absorption. Smart money knows something. While ISO 20022 tokens handle the plumbing of the financial system, Bitcoin remains digital gold. Institutions are building positions at $63,000 because they see the bigger picture. When the banking system upgrades and crypto infrastructure is in place, Bitcoin becomes easier to access, easier to trade, and easier to integrate into portfolios. That 1.2 million BTC absorption, that's preparation for what's coming. Here's what to watch next. Pay attention to Bitcoin's support at $62,000. If it holds, we could see a bounce back toward $70,000 within weeks. That's the pattern from previous absorption events. For ISO 20022 tokens, watch for more bank partnerships and pilot programs. Quant especially has been quiet lately, which often happens before major announcements. And keep an eye on institutional Bitcoin ETF flows. If whales are absorbing BTC while retail panics, institutions are probably doing the same through ETFs. The chart pattern suggests this dip is accumulation, not distribution. Bottom line, everyone sees a crash. Smart money sees a discount. And the banking system is upgrading whether people pay attention or not. This is educational content only, not financial advice. Always do your own research before investing in any cryptocurrency. But understanding what's actually happening while everyone else panics? That's how you position yourself ahead of the curve. Follow Stack Daily for daily crypto and money tips.